Hello everyone, myself is Chethan, Assistant Professor, Department of BBA. So today I am here to give an overview of financial management. So in financial management, we'll be discussing on the chapters Introduction, then Financing Decision, then Investment Decision in Capital Budgeting, Investment Decision in Working Capital and Dividend Decisions. So I hope you all are aware about the term called finance, right? So finance is regarded as lifeblood of every business. So without finance, the heart and brain of the business cannot function. You know how heart and brain is important for a human being. Similarly in the companies, so without finance, so they cannot carry on their business operations at all. So in the company, if you have capital with you, it's called finance. So you know in the companies, we have different departments. We have accounts department, we have HR department. So similarly, we have finance department also. So finance department will going to take care on financial information of the company. It might be procuring the amount, then investing the amount, then announcing dividends to the investors. So you know how company procures capital. I hope you are in confusion, right? How company will procure the capital money. So company will procure capital money either through internal source or external source. So internal in a sense, internally, inside the business organization, we are procuring capital money. Example, I may approach my friends or parents or colleagues or anyone internally. Okay, it's all internal inside the organization. And the advantage of going with internal sources, there is no cost involved in this. There is no expense involved in this. Okay, so example, if you're going to approach your parents to give any help or any amount or any capital funds, are they going to ask you any interest? Okay, there is no expense, right? So internal source, there is no expense or any cost involved in this. But coming to external source, always there is a cost, always there is an expense. Example, I'll go with issuing equity shares. We have a cost involved in this. Yes, the cost is equity dividend. If you go with preference shares, so the cost involved is preference dividend. If you go to debenture, even here also we have cost, that is interest. You go to any banks, okay, I'll go to some commercial banks, I'll approach them, okay, they'll ask you to pay the interest. I'll go to some financial institutions, even your institutions also will ask you to pay the interest. Okay, so external source, the only problem with external sources, you have high cost expense. So only in the companies they'll avoid this external source, okay, and they'll be trying to manage with internal source only. If not, okay, only in that case, so company should go with external source. So then come financial management. So management of capital itself will called as in financial management. So in the company it's important, right? The effective and efficient utilization of capital itself will called as in financial management. And we have approaches of financial management. There are only two approaches, students. We have traditional approach and we have modern approach. So traditional approach is an old approach. Okay, almost if you go back 10 years before, all the companies used to have this traditional approach only. Means only procurement, only procuring. Your company doesn't concentrate on any other aspects. Only procuring capital money will be concentrated on traditional approach. But coming to modern approach, we are also concentrating on procurement as well as its allocation. We are allocating capital amount. It might be between the departments or between department heads. Okay, so you know in the companies each and every department will prepare their own budgets. Okay, so based on their budget requirement, I am going to allocate a capital. So allocation is important. Okay, so then comes financial decisions. So in entire FM chapter, here all subjects in entire FM subject will be discussing only on three important decisions: financing decision, investment decision and dividend decision. So financing decision, it's all about procurement. We are procuring capital. How to procure capital? Okay, so I told you, either we'll go with internal source or external source. So procurement, I have to take a decision of this. How much should be in internal source, how much should be in external. If you go with external only, how much should be in equity, how much should be in preference shares. So we have to decide the capital combinations. How much should be the proportion in equity share, how much should be the proportion in preference share, how much should be the proportion of approaching commercial banks. So we have all these options. So we have like all these alternatives available for the company. So I cannot go with each and every alternative, right? I have to take a decision. Okay, either I should go with only equity share or a combination of equity and preference or a combination of equity, preference and debenture. So we have all these options. So taking a decision on identifying capital mix itself is a financing decision. Okay, So then comes investment decision. So after procuring capital, I have to invest this, right? So investing that amount itself is an investment decision. So either I can invest on a gold or platinum or capital assets. I'll invest on other company equity shares or preference shares, or else I'll purchase some debenture. I'll invest on government bonds. We have like plenty of options available. Okay, so again in this you need to identify productive investment only. We have productive investment and unproductive investment. You know, unproductive like investing on horse riding or gambling activities, IPL. Okay, even there are some people in the companies who will invest on IPL biddings and all. Like it's not illegal, it's unproductive. So there is no probability that you will be getting an income out of this always. Okay, so only should invest on always productive investments has to be done. Okay, it might be investing on capital assets of a company or expanding business operation or investing on automated equipments. Okay, purchasing automated equipments, all these are investments only. Okay, so then count your dividend decision. So dividend decision is again another important one. You know, if your investors are coming and investing on your company, are they expecting anything in turn? Yes, almost all investors will be expecting this. Okay, that's called dividend. Okay, so out of my company profits, okay, I'll be announcing my part of my profits to the investor. It's called dividend. It's a after tax profit, after paying company tax in, okay, out of my earnings, after clearing all my interest to debenture holders, after paying my corporate tax. So then only I'm going to announce the dividends to the investors. So okay, first preference will be given for preference holders, so then comes equity holder students. Okay, so then come goals or objectives. The ultimate objective of financial management in the company. You have only two objectives. So profit maximization. So profit maximization, you know, the intention is only to earn profits. How company can maximize their profits, only earning profits. They're only concentrating on earning profits. Okay, it's called profit maximization. Another objective is you are also concentrating on investors also. You are also taking into consideration your investor point of view. It might be paying on-time dividends to the investors. Yes. So investors are important, right? See, it's not only, see in the company, we'll also see customers point of view and investor point of view. You cannot ignore your investors. So in the profit maximization, actually the company is ignoring the investors. They are only concentrating on earning profit, how company can earn profit. Other than profit earning, there is no any other intention at all. So, but coming to other objective, we are also taking into consideration your investor point of view. Okay, your investors are important, right? So paying on-time dividend. Okay, and if company is conducting any kind of like AGM or EGM or any other meetings, I have to invite, right? I have to invite all my investors, my company directors, everyone. All these people are important. Okay, so these are goals of your financial management. So then comes your financial planning. You know, financial planning is important in company. If you want to have financial management in the company, financial plan is important. Financial plan is nothing but we are preparing a budget. How much amount the company, okay, companies in company procuring their amount, right? So how much they want, estimate. It's an estimation. We are estimating our amount. How much should be the company capital amount? Okay, and how much like and also we are discussing about our company income and expenses. Okay, so we'll prepare a budget. If you prepare budget only, okay, company will come to know their inflows and outflows. How much is their income and expenditure. Okay, so we'll prepare a budget. So based on budget, we'll estimate. So it's called financial planning. So planning is important, right? Even if finance department, so company will do financial planning to have like maybe having a proper financial requirements. Okay, then and there. If there is any requirement in the company, I need to allocate the amount of capital immediately. If any department is approaching me any amount or anything, I need to allocate them. I can't tell them that I'll be allotting like tomorrow or day after tomorrow. Okay, it's highly impossible in the companies. Okay, we have to prepare a budget. So according to budget, I'm going to allocate into each and every department wise. Okay. So this is an overview of the subject financial management. So we have so many concepts in financial management actually. Okay, so it's like just an overview. Happy learning. Thank you one and all.